People often think you need a lot of money to start investing in gold, but the truth is you can start from zero, literally. You don't need a big, safe, fancy gold bars or a millionaire's budget. What you really need is knowledge, patience, and the right mindset. Gold has been the symbol of wealth for thousands of years, but today it's also one of the easiest investments to access if you know how to play it smart. Let's start from the very beginning. Understanding what gold really is as an investment. Gold isn't just a shiny metal, it's a store of value. While paper money loses its power over time because of inflation, gold tends to keep its worth. That's why, during economic crises, people run to buy gold. It's a safe place to park your money when everything else feels uncertain. But starting from zero means you can't just walk into a store and buy an ounce of gold. So how do you do it? First, build a savings habit. Before investing in gold, you need to have cash flow. Even $10 or $20 a week matters. It's not about the amount, it's about consistency. Set a small percentage of your income aside every week just for investment. This simple habit builds the foundation for everything else. Think of it as your gold fund. Over time, that little pot grows, and when it's big enough, you can start making moves. Second, learn the types of gold investments. There are 4 main ways to invest in gold. The first is physical gold. Coins, bars, or jewelry. It's the most traditional form, and it feels real. But it comes with storage risks and sometimes high fees. The second is digital gold. You buy fractions of gold online that are stored in secured vaults. This is perfect for beginners with small budgets. The third is gold ETFs. These are investments that track the price of gold without you actually holding it. You can buy and sell them easily through apps like Robinhood or Fidelity. The fourth is gold mining stocks, buying shares of companies that mine gold. It's riskier, but the potential return can be higher. If you're starting from zero, digital gold or ETFs are your best friends. You can start with a few dollars, and you don't have to worry about storage. Some platforms even allow automatic weekly or monthly purchases. That's like turning your gold savings into a habit. Over time, you'll accumulate real value without even noticing it. Now, here's a key mindset shift. Stop thinking short term. Gold is not for quick flips, it's for building stability. When prices go up and down in the short term, don't panic. Gold's power is seen over years, not months. Many people lose money not because gold failed, but because they lost patience. If you stay consistent, you'll win. Another smart step is to track the global economy. Gold prices are deeply connected to things like inflation, interest rates, and the US dollar. When the dollar gets weaker, gold prices usually rise. When inflation hits, gold becomes a safe haven. You don't have to become an economist, but just paying attention to big news helps you make better timing decisions. And don't forget about diversification. Even if gold is amazing, don't put all your money there. Think of it like this: gold is your shield, not your sword. It protects your wealth from inflation and currency drops. But to grow your wealth, you still need other assets like stocks, businesses, or real estate. Gold is your stabilizer. It keeps your overall portfolio balanced and less emotional during tough times. Let's talk about one of the biggest mistakes beginners make: buying at the wrong time. Many people buy gold when everyone else is talking about it, like during a crisis. That's usually when the price is at its highest. Smart investors do the opposite. They buy slowly and regularly, even when the market is quiet. That's called dollar cost averaging. You buy small amounts over time, regardless of price, and it naturally averages out. This strategy protects you from overpaying. Finally, remember that knowledge is the most valuable gold you can ever own. Before putting your money anywhere, learn the basics: how to check purity, how to verify online platforms, and how to read gold charts. There are tons of free resources online, YouTube channels, podcasts, and blogs that break it all down. Spend at least a few hours a week learning. The more you understand, the more confident your decisions become. Starting from zero isn't a disadvantage, it's your biggest strength. Because you'll grow step by step, and every dollar you invest will have purpose. You're not trying to get rich overnight. You're building real, timeless wealth, and the beauty of gold is that it doesn't care who you are or where you come from. It holds value for everyone equally. The only question is, are you ready to begin your journey from zero? Once you've built the habit and started your first small gold investments, it's time to think bigger, how to grow and protect what you've built. The journey from zero doesn't end with your first few grams of gold or your first digital asset. The real challenge is to make your gold work for you. In this second part, we'll focus on smart growth, long-term strategies, and the traps you must avoid if you want your gold investment to truly change your life. The first rule of growing your gold is security. Never take safety for granted. If you buy physical gold, store it smartly. Don't keep everything in one place. Use a safe, preferably one that's fireproof and hidden. Some investors split their holdings, half in a bank deposit box, half at home. If you're using digital gold or ETFs, make sure the platform you use is well known and regulated. Read reviews, check licenses, and avoid shady apps that promise unrealistic returns. Gold is supposed to protect your wealth, not risk it. The second key is tracking your growth. Too many beginners buy and forget. That's not how real investors think. Make a habit of checking your portfolio once a month. Look at the current gold price. Compare it with your average purchase cost and note your total value. Over time, this builds awareness. You'll see patterns: when prices rise, when they fall, and how global events affect them. This awareness helps you make better decisions, like when to buy more or when to pause. Next, let's talk about compounding, the quiet magic behind every rich investor. Now, gold doesn't pay interest like a bank account, but there are indirect ways to let your gold compound. For example, when gold prices rise and you've made a good gain, you can sell a small portion and reinvest that profit into another form of gold, like switching from digital to physical gold, or use the profit to diversify into silver or platinum. You're not spending the gain, you're recycling it. That's how growth compounds over time. Another trick the pros use is hedging. It might sound complicated, but it's simple. Let's say you invest $500 in gold and $500 in stocks. If the stock market crashes, gold usually goes up, so your total wealth stays stable. That's the power of balance. Hedge your risks by never depending on one single type of investment. Gold gives you calm when everything else feels chaotic. That calm mindset helps you make smarter financial decisions instead of emotional ones. Now, one of the biggest psychological barriers in gold investing is boredom. Yes, boredom. Because gold doesn't grow fast. It doesn't give you daily excitement like crypto or stocks, but that's exactly why it's powerful. Gold is for disciplined people who value peace of mind more than short-term thrills. If you keep buying small amounts every month for years, that quiet discipline will build something extraordinary. Imagine waking up 10 years from now with a stash of gold worth 10 times what you started with, all from small steps you took consistently. Also, don't forget exit strategy. Every investor should know when and why they would sell. For example, You might decide that if gold reaches a certain price, you'll sell 10% to buy real estate or start a business. Or maybe your goal is to hold gold until retirement as an emergency fund. Having a plan prevents panic decisions. The worst time to decide what to do with your gold is when you're emotional. So write down your goals now before the market moves. Let's touch on taxes and legality. Depending on your country, gold profits might be taxable. In the US, for example, gold is treated as a collectible and can be taxed up to 28% when you sell it. It's important to keep records of your purchases, receipts, invoices, and transaction dates. This protects you later and keeps everything transparent. If you're using an online platform, most of them already track this for you, but make sure you download statements regularly. Responsible investing is not just about making money. It's about staying legal and organized. One thing many successful gold investors do differently is connecting with the community. There are online groups, forums, and meetups where investors share their tips and insights. Join them. Learn from others' mistakes and successes. Sometimes one piece of advice can save you thousands of dollars. Plus, being part of a community keeps you motivated when the market feels slow. Surround yourself with people who talk about building wealth, not just spending it. Finally, remember why you started. You began from zero not because you wanted luxury tomorrow, but because you wanted freedom someday. Freedom from fear of inflation, job loss, or economic collapse. Gold gives you that silent confidence, knowing that no matter what happens in the world, a part of your wealth is real, tangible, and safe. The best investors aren't the ones who buy the most gold. They're the ones who buy it wisely, hold it patiently, and understand its purpose. Gold isn't there to make you rich overnight. It's there to keep you rich forever. And if you stay consistent, disciplined, and informed, your journey from zero won't just be a story of investment. It will be a story of transformation. Because gold, in the end, doesn't just hold value, it teaches it.